Hello and welcome. Today, we are going to talk about an important topic. What happens with tax filing when you earn real estate income in Japan as a foreigner? If you're a foreigner who owns property in Japan and earns rental income from it, you may be wondering, what should I do about tax filing? In Japan, the income tax system is based on two key perspectives: the residency status of the foreigner in Japan, the location where the income is generated. In this article, I'll guide you through the essential tax rules you need to know when earning rental income from property in Japan. Let's get started. 1. Basic knowledge of Japan's income tax. First, let's cover some basic information about Japan's income tax system. Residency status for foreigners. Under Japan's income tax system, foreigners are classified into three categories: permanent residents, non-permanent residents, non-residents. Your residency status determines whether you need to file a tax return and how your income is taxed. If you'd like to learn more about each residency type, please see the related article linked below. We'll move on to the next point, where real estate income is considered to arise. Japan's tax system also looks at where the income is generated. When you earn rental income from real estate located in Japan, the income is considered Japanese-sourced income. This means it will generally be taxable in Japan. Now, let's take a closer look at how real estate income is actually taxed. 2. How real estate income is taxed in Japan. The taxation method depends on your residency status. Let's break it down. Permanent residents. If you are a permanent resident, your rental estate income is taxed in Japan. You are required to file a tax return. Your rental income is combined with your other types of income, such as salary, under Japan's comprehensive taxation system. Non-permanent residents. If you are a non-permanent resident, the tax rules are the same as for permanent residents. Your real estate income is taxed in Japan, and you must file a tax return under the comprehensive taxation system. Non-residents. For non-residents, there are some special points to keep in mind. Income tax is withheld at source. Non-residents must also pay tax in Japan, and a tax return is required. The comprehensive taxation system applies here as well. But there are important points: withholding tax. Withholding tax means that when your tenant pays rent, they will deduct tax in advance before making the payment to you. So by the time you receive your rental income, some tax has already been withheld. Let's look at the general rules and exceptions. General rule: when the tenant pays rent, 20.42% of the rent is withheld as income tax. If the amount withheld is more than your actual tax liability, you can claim a refund by filing a tax return. If the withheld amount is less than your tax liability, you will need to pay the difference when you file. Here's a sample example. If the withholding tax is 2,500 yen, but your total annual tax is 2,000 yen, you will get a 500 yen refund. Exception. There's an exception to this withholding rule. If the tenant is an individual renting the property for personal residential use, withholding tax does not apply. Check the tax treaty. If you live in a country different from where the income is generated, you should also check if there is a tax treaty between Japan and your home country. A tax treaty helps prevent double taxation and coordinates tax rules between two countries. Since Japan and your home country may have different tax systems, the tax treaty can help resolve differences and ensure fair tax treatment. Be sure to review the applicable tax treaty carefully. Next, let's see how to calculate your rental estate income. 3. How to calculate real estate income and required tax forms. Real estate income is the profit you earn from renting out property, such as land or buildings. It is calculated as total rental income minus necessary expenses. Necessary expenses are costs that are directly related to earning rental income. Expenses that are not related to your rental activity cannot be deducted. If you own fixed assets, you can also deduct depreciation expenses. which must be calculated in accordance with Japan's income tax rules. When filing your tax return, you must prepare not only Form 1 and Form 2, but also additional documents depending on whether or not you use a blue return system. If you qualify for the blue return, you must submit the financial statement for blue return. If you do not use a blue return, you must submit a statement of earnings and expenses. The Blue Return system offers various tax benefits. For example, under the Blue Return system, you can deduct salaries paid to family members who are involved in the rental business if certain conditions are met. For more details, please refer to the related article linked below. Now let's answer a common question. Can non-residents use a Blue Return system? 4. Can non-residents use a Blue Return system? Even if you live outside Japan as a non-resident, you can still use the Blue Return system. However, the timing of your application is very important. For example, if you submit application by March 15, 2025, you can use the Blue Return starting with your 2025 tax filing. If the rental activity is your first ever business and you submit application within 2 months of starting the rental activity, you can also use a blue return from your 2025 tax filing. In all other cases, you can start using the blue return system from your 2026 tax filing. Please remember, simply submitting the application does not automatically allow you to use the blue return immediately. Timing is key. Conclusion. So to summarize, when a foreigner earns rental income from property in Japan, their residency status and where the income is generated determine how the income is taxed. It's essential to understand whether you are a permanent resident, non-permanent resident, or non-resident. Make sure to correctly calculate your income, prepare the necessary tax forms, and check whether you can benefit from the Blue Return system. Also, don't forget to review any applicable tax treaties to avoid double taxation. Thank you for listening, and I hope this guide helped you better understand Japan's real estate tax rules for foreigners.